Aloha folks, thank you for checking out this video. If you are new to the channel, my name is Mark, Mr. Dividend Investor. In this video we are going to talk about a company that has been giving dividends for 29 years and has been having great dividend growth of 23% per year for the past 20 years. So if this is something you want to take a look at and possibly put on your watch list, sit back and enjoy it. As always, please remember this is not financial advice. I'm just sharing. Hopefully for those of you that are new to the channel, this is something that you are interested in. If you're looking for dividend companies to invest on, definitely hit that like button, hit that subscribe button, and don't forget the notification bell so you don't miss out on the videos that I put out. With that said, let's take a look at this company. So the company we're talking about is Stryker. Ticker symbol is SYK. This is a healthcare equipment company that engages in the provisions of medical technology products and services. So you can see, if you go to their website, you can see some of their equipment and their medical and surgical equipments in here. You got all these products, as you can see from the website. Definitely something to take a look at. Pretty interesting if you go to their website. As you can see from this, you got from emergency beds and all the tools that healthcare providers need. So if we go to Yahoo Finance, one of the things that I found was a article written in January 14, 2022. 10 best stocks to buy according to Terry Smith's stuff. So in here is Stryker. So you definitely, if you get a chance, read this article. Pretty interesting. Got a lot of great companies that they mention in here. One of them is one of my favorite companies. This is Pepsi. So definitely check that out, Yahoo Finance. Now if we go to, again, Yahoo Finance is a great tool that you want to use. It's free. So one of the things I look at is comparing the performance. So as you can see, the blue is the S&P 500, and then you got the red one, which is Stryker. So you can see from the chart, it has been lagging. So definitely something to kind of think about. If you look at the earnings, is also a mixture of beats and misses, as well as the financials. You can see from 2017 to 2019 has been growing the revenue, and then on 2022 kind of slightly dipped. Now looking at the trends, you can see a mixture of holds, buys, strong buys. Recommended trend is between a buy and a hold. The price target is below the average of 288. Currently is at 266. Now if we go to Simply Safe Dividend, based on their dividend safety score, they rate it as a 90, which is very safe. The dividend yield is 1.04. Market cap is about 101 billion. Looking over to the key metrics, you can see payout ratio is about 27%, which is very low for most companies. During a recession, they have increased it. If we look at the dividend growth, you can see last 20 years it's up 23% per year, which is very fast. Last 5 years 11%, which is very fast. They did have a cut somewhere around here in the 2009, and then from 2009 to 2020 it has been going up, so which is great. Dividend growth streak of 29 years of consecutive increases, and then you can see uninterrupted dividend streaks of 29 years without a reduction. So payment details, you're going to get paid quarterly: January, April, July, and October. The annual payout is about $2.78. Now if we go to NASDAQ, another tool that you can possibly use if you want to look for it. So you go to NASDAQ. Under NASDAQ you look for Dividend History. So you can see a much more breakdown. Dividend yield is 1.4, P ratio is about 53, and then your annual dividend is 278, right? Now if we look over here, you can see you get paid on the 3, the 6, the 9, and the 12. So there's the breakdown of it. You can see it has been growing from 2016 and moving on to 2013. So you can see these are great. It's a great tool. Again, NASDAQ, one of the things you can use to kind of look for the dividend history. Now if we go to tip ranks, their analysis rating is a strong buy based on 11. You got a mixture of a buy and a hold. Price target is about 297 with 11% upside. At the time of this video, it's at 266. 12-month forecast rated as a high of 315. The average of 297 and then 280. So if you look down to it, you can see kind of like a mixture of some of these analysis. You got some buys and holds with like 18% upside, 14%. So definitely something to kind of consider. Now if we go to WeBull, you can see based on 29 analysis rated as a buy, 41% says it's a hold, and strong buy is 27, and then you got your buy about 27. Now if we look at the price target, kind of similar, about 315 for the high, 293 the low, and 288. So now if we go to bar chart, get a comparison based on their analysis. They rated it as a moderate buy. There's about 16 of them. 3 months ago it still is a moderate buy, but there was 18 analysis. Breaking it down, you can see at currently there's 9 strong buys, 1 strong sell, and 6 hold. So pretty much similar. 3 months ago, 12 strong buy, 1 strong hold sell, and then you got 5 holds. Now if we go to the bar chart, looking at the chart, again the 20-day moving average is the red, the 50 is the blue. You can see pretty choppy. You can see a lot of downward. So I'm expecting it to go this way down, possibly maybe going to as low as 258. Worst came the worst, it will go down around this side. Yeah. Volume, you can see there's a lot of selling going on. Pretty much what's happening with the market. MACD, you can see a crossover here. Looks like it's gonna go down this way. Now the Rizzo is in the right place. It's in the good spot right here. So you can see some of the things. So I will definitely put this on a watch list. Wait for a dip, then possibly doing dollar cost averaging if you intend to buy this one. So Simply Wall Street, looking at their company overview, you can see average dividend pay with mediocre balance sheet. Some of the positives: forecast to grow 8%, earnings have grown 4.8 per year. Some of the risks: a higher level of debt. Now if you go to evaluation, you can see based on their analysis of share price versus fair value, they rated it as 38% overvalued. So like I said, definitely wait for a dip, make it cheaper. Their fair value is about 193. All right, now going to Robinhood, you can see on the week performance, it's up 1%. 1 month it's up 6%. 3 months it's up 0.3. For the year it's up 10%. 5 years it's up 118. Now go through some of the recommendations of Robinhood. You can see based on their analysis, they rated it as a buy as well, 55%, about 37% hold, and about 7% sell. Right? Alright guys, thank you so much for watching, guys. For me, I'm definitely putting this on my watch list. It's a good buy, but I'll wait until it dips. Hope you like this video, guys. Definitely give it a thumbs up. Also, when you have time, check out my Instagram, same name, Mr. Dividend Investor. Alright guys, stay cool, keep investing, and I'll catch you guys in the next video. Right, take care, aloha.